Welcome to our business class. We are taking business studies. In our previous class, we've discussed about trial balance. And in our class for today, we are going to look at the trading profit and loss account. When we talk about the trading profit and loss account, we are talking about an account that helps us to ascertain the true stand of our business. Okay, an accounting system that helps us to understand how we are doing in business, help us to record our expenditures, help us to see what we have bought over a period of time, what we have sold, and what we are closing the year with. It helps us to know whether we are making profits or losses. Every business goes into business. Every individual goes into business because of profit perception. You don't just go into business unless you are running a charity. And so that's why we call those areas non-profit making organization. But for a profitable organization that is set up to make profit, do business and make profit, we have the trading profit and loss account to see how the trading is going. Is this trading giving us profit or is giving us losses? That's the trading profit and loss account. It is a book of an account that helps us to know the true stand of our business, to know how the trading period is running, if we are making progress or we are retrogressing. Is the business making profits or it's making losses? Are we meeting the aim while we set up the business? Are we able to take care of expenditures that comes with the business and still make something out of the business? That is trading profit and loss account. Now, what is the purpose of having a trading profit and loss account or keeping a trading profit and loss account in your organization? Every organization, whether small or big, whether you run a small kiosk, a small shop, a big business, you're supposed to keep a record of profit and loss, trading profit and loss. Because you buy stock. Because you started the business with a stock. You purchase stock. You sell over time. You close the month with some stock left in your business. You make sales. And then by the time you minus your sales from what you have on hand and what you started your business is the business going forward or is dying? So no matter the size of business you manage, make sure you have a trading account. Every business should have this. Now let's look at why do we keep a trading profit and loss account? What is the purpose? That is purpose. One, it shows gross profits. It shows gross profit. In my next class, I'm going to show you how you calculate gross profit, cost of goods sold, net profit. Come along in our part 2 of trading profit and loss account where I teach you that. So just take note the purpose. I will explain in-depthly when I teach you in that class what is gross profit. Now, it helps you to show your gross profit. The next one is it helps you to know if you are making profit or loss in your business. Is the business doing well? Is the business making profit or you are making losses? Then the third one, it helps to see the double entry principles. Every debit entry has a corresponding credit entry. That's a double entry principle. Every credit entry has a corresponding debit entries. It helps us to see that principle come to life. And then we have to know whether to reduce expenses. If you are spending more than you are expected to spend, you will cut down on expenditure. The trading profit and loss account help you to know whether you're going to cut down on expenditure or not. And then the fifth one is to know when to expand business. If your business is doing well, profit is streaming in, and you just have the location, and you look at your book of account, your trading profit and loss account, and you see that you are making more, and you look at this business as something you can expand, it gives you room to know that you have to expand, areas you need to expand, where you need to go and expand, and products you need to focus on. There is what we call departmental stores in business accounting. where you look at different products, if you are running different products, and see the one that is making more profit and see how you're going to go into it. So trading profit and loss account help us to know whether we're expanding business because we're making more profit in order to make more profit, or we are reducing. Then it helps us to know when to decrease or increase price. If you're making more expenses, you have to look inward and see why are you making these expenditures. Then you have to look at your competitors and see, are their prices more than yours? If you look at it and their prices are high because of the expenditure coming with the product, that means you're going to increase your product, the price of your product. So trading profit and loss account help us to appraise all of these areas. Now, we have seen the first objective, which is we've explained what trading profit and loss account is. We've seen the purpose, why it is important to have a trading account. We said it helps us to know our gross and net profit, help us to know if the business is making profit or loss, brings the principle of double entry to light, help us to know when to expand, help us to know when to downsize, help us to know when to increase price, help us to know areas we need to work on. Now, we're going to look at the second objective, which is draw a format of a trading profit and loss account. This is the format. You have what we call the T shape and the vertical. This is the T shape. The vertical is just for you to remove the line, and it's just open. You will not demarcate it with any line. That's the vertical style. But I'm using the T shape. Now, in preparing your trading profit and loss account, number one thing you need to know is it must have a heading. A trading profit and loss account needs a heading, so you will give it a heading. Trading profit and loss account for the year ended. If your year ended in your book of account ended in March 31st, 19 whatever, or 2000 whatever, you will put it. If it ends in January, you will put it. So first, your trading profit and loss account must have a heading. If it is in exams, this heading have its own mark. So don't prepare a trading profit and loss account without a heading. Now, this is the format. After you've given it a heading, whether you are preparing the vertical style or the T style, this is what you do. First, you have sales, which is at your credit side. Now, let's start the format with your opening stock. What did you start your business with? That's your opening stock. The stock you bought in your store. You bring in capital, you buy things. Say you are running a bottled water company. You go, you buy a trailer load of bottled water. Now, that bottled water you buy 2,000 pack. Okay, the 2,000 pack is your opening stock. Now, you've opened it. As you are running the business through the months, the stock got exhausted. You purchase another set of bottled water. You will add it to your opening stock. Okay? So you have bought. Remember, in this opening stock, you've made sales. The sales you made is the money you used to buy more things, which is your purchase. Now, in order for you to have your gross profit for the month, you are going to calculate how many water did you remain. If after selling you start with first 2,000 pack, you repurchase, you sell 1,500 pack. You are reordering after you have 500 left in the store. You purchase again and you purchase 2,000 stock again. Remember, you have 500 before. Now you've purchased and you purchase 1,500. What you have is 2,000, right? So you are going to add your opening stock plus your purchase. That's the amount you are going to bring down here. Then you will go and calculate how many is remaining. Let's say for both your opening and your purchase, you have been able to sell 2,500 and you have like 1,500 as you want to close that trading period. You will less your closing stock from what you have here. By the time you less it and you put your sales here, you are going to minus, and what you are going to have from your closing stock you added and your sales, what you will have is your gross profit. That's what you bring down here, and that is what you are going to bring down here. Okay? Now, in preparing further, you will have all your expenses. Because all of this did not happen. You're buying stock, you're purchasing again, did not happen without incurring expenditures. Our expenses can be transport, stationaries, carriage. All of these are bills you have paid, expenditures you have incurred. So you bring down all your expenditures all here. I did not mention everything that will be expenditure, but you know what you will term expenditure. Your delivery, your transport, all of these are expenditures. Now, after you put your expenditures, you are going to, so these have been calculated without removing whatever you've spent. It is gross, everything put together. Now we want to come and know the real profit we have made. What is our net profit? That is profit you made after all expenditures. So you have brought out all your expenses. You brought out all your expenses. Now you are going to minus. After you minus your expenses from your gross, you minus all expenses from the gross profit you have made. That will give you your net profit. And this net profit is what you're going to bring down. And this net profit is what you are going to transfer to your capital, because that is what you have made as profit. Gross profit / loss. If it is loss, that means you've made loss. If it is profit, that means you have made profit. Whatever you make here is your money, because you've removed all expenditure. So you have calculated it, and you know what you put into the business. You know what has come out as profit. You send it to your capital to use to buy your product the next trading year or next trading month, and you will know how much you are going to spend out of it and how much you are going to remain. You can't eat all your capital, neither can you eat all your gains. You are going to reinvest some into the business and use some to take care of other personal needs and other expenditure. Here, under expenses, you will pay wages and salaries. Salesmen, you're going to pay them. Okay? Telephone, you're going to pay. That's communication. All of this, you will take care of your expenditure. So this is the format. The format is you have your opening stock, you have your purchase. Okay? Then you close your stock, you minus from your sales, you have your gross profit, you have the trading profit and loss account. Remember I said your heading must be there. Then we start with our opening stock, our purchase, then less your closing stock from all of this, minus from your sales, you have your profit, gross profit. Then after making your gross profit, you've done all this calculation, you've not put all the expenses you have incurred. Then you come to calculate your expenditures. What are the things you have spent? Salesmen, wages and salary, communication, transportation, whatever expenses are come under you trading this, you bring it down here. Then you are going to minus all your expenditures from your gross profit. That will give you your net profit or net loss. This is why we prepare profit and loss account, to know the true stand of your business. Did you make profit or loss? If you made profit, kudos, you give yourself a pat at the back, or your organization will be happy that they did that. Okay? If it is a company that shares dividends, at this time, they are going to know how much they have made. Okay, now, at this point, you made your account to this point, you know whether you make profits or loss. You are going to transfer this. This will be your capital. Capital to start your next year of business. Capital to start your next month of business. So this gives you a true stand of the business. What did you buy? What did you sell? What expenses did you incur? After you minus your expenses you incur for what you buy, what you sell, how much you've invested, how much you have made, how much you have spent, you will know the true nature. Did you make profit? Did you make loss? Are you going to use part of this to reinvest into the business? Are you going to take some to take care of personal expenses? Did you make losses? Why did you make losses? Here you are praised, analyze and see why. That's why we talk about the purpose of trading account. So come along as we discuss part 2 of this trading profit and loss account, where we take a life example and solve a simple question. Alright? There we will talk about cost of